Good afternoon, everybody. Holy banana bread. Welcome to the show. Welcome to the show. I thought I had about 5 seconds more, but well, that's fine. That's fine. Well, those of you who were here yesterday, we had a great show. We had a great show. We looked at the predictions I made for this year, and oh, um, you know, much better than I thought. I really thought I thought I botched. I thought I botched my predictions this year because it's been a crazy year. It has been an absolutely crazy year, powered by that big orange Smurf to the south. So, what can I say? What can I say? Did better than expected. All of the predictions, and you know what? It's a long stream, guys. If you want to check it out, all of the prediction part, that's all in the first hour. So a lot of fun, definitely worth checking out for sure. Oh boy. So we do have on our hands a little bit of a red day today. So what the heck is going on with the market? Well, the reality is not a lot. There's not a lot really going on with the market. We are looking at low volume days. So today, tomorrow, we're not going to have a lot of volume. You got a lot of people who are just taking the week off. It's kind of that that ho-hum in between Christmas and New Year's, but nonetheless, there is still a little bit of action. In the U.S., we're seeing a little bit of some profit taking in the tech sector. That's certainly putting some downward pressure in there. Other mega caps, same kind of general idea. We got the low holiday volumes. We also got a little bit of that year-end positioning because this is today and tomorrow are the last days for tax loss harvesting. Wednesday, too late. Wednesday, too late. But with a T+1, you can technically tax loss harvest tomorrow. I wouldn't do it. I would want it done. I would say today for me would be the last day, but technically you should still be able to do it tomorrow. But I wouldn't say it's 100%. I wouldn't say it's 100%. So what can I say? Of course, up here in Canada, we also had a little bit of a pullback in our material sector. So mining, gold, silver, both of those are down today. So that definitely helped bring things down a wee bit for sure. All right, let's head over here to the market. That's not the market. Here's the market. So, we've been playing around yesterday, and my head was in the way, so we had to move my head up into the top corner. Now I'm beginning to think that my head is in the way again. My head is once again in the way. Holy banana bread. It's like, what can I do? What can I do? All right, I'm going to move my head over here. Let's just put my head over in this corner here. And we'll see how that goes. Just a sec. I will save that update. And there we go. It's moved my head over. Hopefully, you guys should see it in a couple seconds. So there we go. That I think has gotten me out of the way. So we're looking at the TSX. So TSX, fantastic month. We're well above that blue line. So that blue line, guys, that's where we entered the month. So, well, technically it's where we left the previous month. So where we left November, we are having a pretty solid green month. We're having a pretty solid green year. I've mentioned before that I would love to see us hit 30%. A return on investment on the TSX. It's not going to happen. We're running out of days. It's low volume days. We technically have 2 days more after today to do it, but right now we're currently sitting at 28.78%. So it's not going to happen. It's not going to happen. But nonetheless, it's fantastic. I mean, we beat the TSX. We beat the S&P 500 by more than 10%. So that's not a claim we can make many years. So I love it. Let's take it. Let's take it for sure. So yeah, we are having a red day today. We are down 0.16. We're not going to get big movements up and down. We shouldn't over the next few days. So I don't expect to see a lot changing. We hopefully will see a little bit of green tomorrow, but we could, if we got those very last minute tax loss harvesters, we could see a red day again tomorrow. Definitely. And those of you who are thinking, well, what about that Santa Claus rally? That technically begins on, well, on Wednesday. So Wednesday, we should hopefully see that. Oh, and guys, I got to turn the timer on because the Financial Express is still on the tracks. So guys, if you want to stream tomorrow, you know what to do. 4 supers, 4 gifted subs, a combination, and we're there. And if we get to that, if we get there and we do that extra one, well, we do have. I've made it. I haven't uploaded it here yet, but I will upload it. I will upload it. You guys wanted a New Year's funny goat, a New Year's funny goat. Give me a second here. I should be able to upload this, and it should be able to run in the background as we're doing it. Let me just pick it up. I did it's made, it's downloaded. It's not as funny. I don't think it's as funny as the Christmas one, but nonetheless, we'll get it. There we go. We got it in the background uploading. So if we get there, we'll pull it up. If we don't get there today, tomorrow, and Wednesday, I'll make sure you get to see it. You'll get to see it at least once, no matter what. No matter what. You guys know how I am. You guys know how I am. You'll probably get, anyway. The one that you're not going to get to see anymore, and I will, you know what? I showed it for the last time yesterday. I will make right now the last time. We'll look at the Christmas goat one last time. All right, here we go. There we go. I love that goat. All right, and in fact, guys, right now, over and I'm deleting the Christmas goat. It is gone. Christmas goat is now officially gone. I have deleted it. I can't show it, even if you came in and said, Candace, $1 million. Well, if you said that, I would upload it again and show it. But yeah, no. The Christmas goat is now gone. All right, back to the charts. We also have a bell. I was late. I've been doing so well with the bell, and then I was late 5 minutes one day last week. We're not going to let that happen this time around. All right, now, before I go to the U.S. chart, we're already on the board. Sky is in with a $2.79 a super sticker. So guys, that means we do have our first goat of the day. The corral is open. Let's fill it up and let's get tomorrow's stream in the books. In the meantime, let's take a look at the S&P 500. It is also in the red today, 0.34, well, now 0.35 to the downside. It is, though, still having a green month. It's still well above the blue line. It's going to finish above the blue line. And on the year right now, they're sitting at 17% year to date. So a really good year for the S&P 500. Really, 17%. That's higher than the average. That is really, really good. Unfortunately, not good enough to beat Canada. So, oh, Canada, we win. Let's just leave it at that. The NASDAQ today, seeing a little bit more movement. So it is currently sitting at negative, so it's sitting at negative 0.44. So they're down almost 1%, about 0.5%. Yeah, there we go. Not really almost 1%, but 0.5%. Some of that sell-off, people taking some profits. No real problems here. They're still doing good on the month. So on the month, they are currently above the blue line. They are currently in a green month. You gotta love it. On the year, they're actually doing better than the S&P 500. They're up 20.90% year to date. Still doesn't beat Canada, but you know, at least they're trying. At least they're trying. The Dow Jones. The Dow Jones also having a red day, down 0.51 today. Um, they are year to date, they're up 13.62%. So they're not beating the S&P 500, but at least, you know, that's still not a bad number for the Dow Jones Industrial. The Russell. So these are our little guys. And there we go. I have to pull it up so you can see the blue line. They're also having a bad day today, 0.73 to the downside, but um, they're still looking pretty solid on the year, and they are having a green month. They're having a green month. They're well above that blue line. All right. Now, part of the problem today for Canada is, look at this, gold. Gold not having a great day. Gold was, well, yeah, look at these. These are some big candles. Gold down 4.43%. Silver, oh boy, silver even worse. It doesn't look worse, but it is worse. It's down 8.16%. The commodity of the day, I guess, well, not the day, but at least material-wise, is copper. Copper up 0.60%. So copper still doing okay today. Oil's not having a bad day. West Texas Intermediate coming in up 1.89%. So that's pretty good, pretty good. And guys, we got about 3 minutes and a half, 3.5 minutes to the bell. So I'm paying attention. Both Bitcoin and Ethereum not having great days. All of the gains that they picked up on Sunday, all gone. That's kind of the story of Bitcoin. It's like, let's move up on the weekend and come straight back down on Monday. That's what we're kind of seeing here. All right. Heading over to, let's get rid of the sidebar, heading over to the heat map. As we can see for Canada, the banks are looking pretty good today. TD up 0.4, Royal Bank up 0.7, BMO up 0.97. So yeah, not looking too shabby, but of course we're seeing all of our red in our little middle section here. So all of our minerals, non-energy, for sure. Now the regular oil, like CNQ, is up pretty good, up 1.39%. Imperial Oil up 0.60%. Cenovus up 1.18. So we're seeing a lot of interesting stuff in here. Both railroads doing pretty good. CNR today up a full 1.20%. So that's not too shabby. Looking at the U.S., we can see we got a little bit of red in tech. So Tesla down 3.29%, Nvidia down 1.28%. Apple is actually not down. They're up 0.12%. Google's down a wee bit. So is Microsoft. Meta also. So yeah, not the best day on the market for sure. Looking at crypto, pretty red day. Now, guys, we have a tradition around here. We like to pick on an altcoin, and we're just going to grab one. We'll grab one. We'll grab a green one because it's a red day. We'll grab this one here. What is this? Let's pull it up. So we have Vector Space AI. What the heck is this? I don't know what this is, guys. There's about 15,000. Oh, now my head's in the way. You can't see the name. I might have to just put my head back. They're called Vector Space AI. Obviously, they're taking advantage of the AI craze, and they're worth about 0.68 of a cent. So they're not worth much. Don't know what they do. Obviously, they are putting AI in the title to make themselves, make people think, oh, AI, gotta grab it. No, not this time. Even an AI would say, no, don't take this one. I'm leery of things like this. Anyway, it's funny. I clicked on it as a green one, and it's telling me here that they're down 21%. So what's going on with that? I don't know. Guys, this is not the way to make money. If you want to make money in crypto, stick with the big coins. Stick with your Bitcoins, your Ethereum, your XRP, Solana, heck, even the Dogecoin. And guys, with that being said, it is bell time. The market. Whoa, there we go. The market's closed. The market is closed. I got through all of that. I now need to hit chat. Oh boy. I'm already a little behind. Let's get caught up. We will start with Brian. Brian says, good afternoon, everyone. The weather is nasty pit there. Yeah, so we had freezing rain last night. Did not lose power, though, so that was a good thing. It finally stopped raining today, so it's, it's not that cold outside, but it's wet. And sometimes I find if it's wet, it doesn't take much to make me cold. Let's see. Brian says, 2 sentences out and a typo. Don't worry about it. Don't worry. Nobody, you guys are not being marked for your spelling. Don't worry about it. Let's see. Claude, hello. My portfolio today is like the weather. Like Stan Lee used to say. Enough said. Yep. Good old Stan Lee. Is today's topic Jupiter or Saturn? We went on some big tangents yesterday during this week. We kind of went into a lot of space tangents. So we're no space today. No space today. Well, I'm going to try. I can't promise no space, but I'm going to try to stay out of space. Brian says, just like Red Mars, I can barely see much loss in my accounts. Scott's in the house with a good afternoon to all. Paul says, good afternoon. And of course, speaking of Scott seems to know a little bit about space as well. So I'm kind of curious what's going on with the Scott. Just saying. Paul says, good afternoon. David says, Xmas funds will. Okay. Christmas funds will buy you some stocks. Maybe that's what we're thinking. Zyborg says, gosh darn, stocks just won't go up. Yeah, it's, it's a red day. What can we expect? And also, it's just, like I said before, low volume. Like, there's a pretty low volume historically between Christmas and New Year's. So it takes it's a little bit harder to have the market really do anything. Elaine is in the house with a good afternoon. Icy rain day, stayed inside. Best place to be on a freezing rain day. So, yeah. Don't go out, don't drive. If you can stay in, that's absolutely what you want to do. Scott says, I'm actually a little bit in the green today. Nice. That I like. New Year's Eve is a short trading day. Is it a short trading day? If it is, I got to change the schedule. Maybe I have to start earlier on. I actually don't know. I don't know if it is a short day or not. Let's find out. TSX. Here we go. TSX holiday. There we go. Holiday hours. Boom. All right. Allow. All right. Let's take a gander here and see what's going on. So Wednesday, no. Oh, wait. Yeah, no, look. It's a full day, New Year's Eve. 9:30 to 4. So, yeah. We are, yeah. I was just looking here. I was going to be like, wait a minute, what about, but I was looking at the last time, like on Christmas Eve, we closed early, but we're open. We're open, Paul. We are open. All right. Do ETFs tax loss harvest? Good question. So I think you're thinking of not selling ETFs, but rather do the management companies for ETFs do some tax loss harvesting? If it makes sense, I can't see why they wouldn't. Because you got to look at it this way. They do there's a lot of capital gains. But then again, guys. So when a company, it doesn't matter who, but when they are giving you the distributions, they're giving you that capital gain. So obviously they could not have paid on it because, you can't double tax. Double taxation is a big no-no. So I have a feeling, and I've never really thought about this before until this question. I have a feeling that they may not need to tax loss harvest. If they're passing those gains on to you, then you're the one who's paying them. So you're the one who may need to do the tax loss harvesting. So I'm going to say I don't think that there's going to be any significant. Maybe though, if they hold assets on the side, maybe in those situations they might. But yeah, that's an interesting question, Paul. I kind of want. I think I might want to revisit it. All right, a Wahipple in the house with a hey. Um, Meowie says, New Year's goat. Yes, there is. Baby New Year goat. There is a baby New Year goat. There's a baby New Year goat. So we currently, actually, let's quickly jump in here. Mary has dropped a super sticker of $1.39. Thank you, Mary. Thank you. And that is goat number 2. So we're halfway to a show and getting really close to that New Year's goat. So the New Year's goat is there, and I'm really tempted to just click on it, but we'll see the goat. I'm sure we're going to see the goat. I love it. And of course, guys, Mary was in here doing the super sticker, and Mary is our official captain of the like button. That means, guys, it's time to hit that button, turn it green. It helps the channel out. It's pretty much the best. It's the best way to really, help a channel grow is by hitting that like button. Any type of interaction you do with a YouTube channel, if you like the channel, interact with it. It really helps them. All right, let's see here. And I also get to have coffee when we do the Mary part. Oh gosh, that's so good. Paul says, silver was down 10% in minutes. Mean reversion. Yeah. It's good old silver. All right. Brian, Christmas goat is gone. That's it. I'm leaving the channel. Uh-oh. The Christmas goat will be back at Christmas next year. We'll bring back some Christmas themed stuff for you guys next year for sure. You need to create an exercise goat for the new year. Maybe. Well, yeah, I'll come up with I'll make a couple of different, we need new goats. Like, I think right across the board, I think all the goats need to get replaced in the new year. So, that'll be one of my goals. One of my early goals, like, let's get it done sooner than later. All right. Mario says, good afternoon, everyone. Let's see. Brian says 21 analysts in the U.S. are predicting the U.S. Dow will be up 9% on average, not one negative prediction. So, yeah, there's a lot to unpack when we look at 2026. One, right now, we got a couple of scenarios that are setting up. Powell will be leaving the U.S. Fed. So whoever the new chairman of the Fed is, more than likely, they will be very open to what Donald Trump wants to do, which is slash interest rates. So that's going to be a really interesting thing. So if we do get this mass slash of interest rates, that will be the market will really have an interesting day for sure. So we're looking at that. We're also looking at the midterm elections. So a lot of times heading towards a midterm election, if the party in power, so right now the Reds, so the I was going to say the Liberals. No, the Republicans. So the Republicans are, they're going to throw money. They're going to try to. I think they're actually going to I think the market will get pumped from it. I think it will this year. So it's going to be very interesting to watch nonetheless. And we'll analyze it as we go closer and closer. Of course, it will be the fall this year is going to be a lot of fun. I think it'll be a lot of fun. But yeah, there's a lot of positivity when it comes. And also keep in mind, when we look at tariffs, everybody and their dog last year at this time looking at the whole idea of tariffs, they were supposed to be really, really bad. I'm not saying they're good. They're not. But I think the level of, what's the word? The level of how they responded, how the market responded to them, not as bad as we were expecting. So it's, yeah, I think there's going to be a lot of very interesting things in the market. And right now I am currently working on predictions for next year because that video will be coming out in the first week of January. So that's going to be that's going to be cool. That'll be cool. All right, let's see here. Kiss of Death. That's a coin scam. Probably talking about that vector AI thing. Brian, one day on your crap coins, you should pick as far into the pile as you can. I do. I go down as low as it goes. Now, they do rotate them, so every so often, they're always different. They're always different. I never know what I'm clicking on either, guys. Like, I don't pre-look for a coin that might be funny. It's 100% random. It's 100%. Like, today's wasn't that funny. There wasn't anything really funny about it. Plus, we were also up against the bell, so there was that as well. Ian is in the house with a green day. Valve man, I expected a drop in the markets just after Christmas. You got it. You got it. Now we know what Valve man's Christmas list was. Dear Santa, please give me a dip to buy, before New Year's. There we go. You got it. You got it. Bismarcky says, good afternoon, all. Picked up some Tesla on sale today. So yeah, Tesla came down quite a bit. I did open a swing trade on Tesla. So I am, I don't know when it's gonna go back up, but definitely soon, sooner than later. Let's see. Brian says sales report later in the week for Tesla. We got Gush in the house with a good afternoon. Oh. A says, tell us, Bell kept me in the green. Nice. All right. First baby goat of the year. Yep, we got the baby goat. It is there, guys. And we're getting closer. We're getting closer to that baby goat. Scott says, yes, my head is filled with space. Nice. I know that we're talking, guys, we're talking about astrophysics, not like, airhead. Oh boy. Paul said, I had 1001 left in my second TFSA, bought one share of Harvest Tesla at 937, already down 2 cents. Oh boy. Ian says, goats are great, but you could also make some eager beavers. Don't know what a guy would have to do to get one. Maybe a hat trick. Oh, an eager beaver. Okay. Yeah, maybe we'll have to see what I'll see what I can make. I'll see what I can make. Let's see. You are beautiful says, oops, I'm late. Sorry. That's all right. Nothing wrong with being late. Wahipple. My portfolio started dipping around December 15th last year, and then Liberation Day happened. Oh yeah. I'm really hoping we don't get another. Well, I'm hoping and I'm not. I mean, if you've got the money on the side and Liberation Day happens, there's a lot of money to be made there. It kind of sucks to watch it happen if you're looking at your portfolio that day. In a way, sometimes it almost makes sense that when you get something that comes along like Liberation Day, is to not even look at your portfolio per se, just look at the cash part of your portfolio and say, what can I buy? Yeah, because guys, the amount of money and just like here, let's take a look. Let's just go. We'll just go to VFV. VFV. We're going to pull this up here. We'll pull up the 1 year. So, all right, here is your Liberation Day. So, I mean, look at it here. If you had bought a VFV on Liberation Day, the low was $124.18. So you probably wouldn't have got that. But let's say you got it at $125. Oh, boy. Now it's worth $168. So that's not too shabby. So it is, yeah, you can sort of see the buildup as people were wondering what was going to happen with the tariffs. This was the build-up to Liberation Day. Liberation Day happened, and then when you actually look at Liberation Day, it really wasn't that bad. As in, the hype was bad. The hype drove us down, but it wasn't that, Trump really didn't go that bad. I mean, it was more silliness and craziness, but the markets responded, and the markets have been on a crazy tear pretty much most of the year until recently. We've kind of flattened out a little bit, but we'll see how this goes. We'll see how this goes. So what can I say? All right, and guys, we got Jonathan in the house with a $2 super sticker. I'm late. And that, guys, that's our third goat. We got one more goat in the corral. So we're one away from a Tuesday show and two away from the baby New Year goat. The baby New Year goat. Oh, boy. That's one that, like, quite literally, we have 3 days that we can perhaps look at the baby New Year. So then after that, it's old news. Old news. All right. Was this the last day for tax loss selling? No. Technically, tomorrow is the last day because of T+1. You need 1 day to settle, which would be the 31st. So you have to make any tax loss harvesting has to be done by tomorrow. However, and this is kind of me, like, yes, everything should settle that happens tomorrow, but to me, that's cutting itches too close. I always like a 1 day buffer. So if I was doing any tax loss harvesting, today would be my deadline, 100%. I would not take the chance of doing it tomorrow. I'd probably be fine, but I wouldn't. So I'm hoping that, and maybe there are people out there that are doing it the same way that I would with that 1 day buffer. So there will also be people who won't. There will be people who are like, it's probably going to go through. I don't like that word probably when it comes to finances. I like, will it go through? Yes, no. Not yes, or it should, or maybe, or I don't want to hear that. I need to have a yes. So for me, yeah, today would be the last day, but technically it is tomorrow. So technically we can have a little bit of downward pressure tomorrow, but I think you'll have more downward pressure today than you'll have tomorrow. So that might help. That might help us get to a green day. So we'll have to see. We'll have to see for sure. But then the Santa Claus rally technically begins. Well, in this case here, we got 3 days. So you're going to have, January 2nd. Sorry, you'll have January 2nd, January 5th, and of course, the 31st. So December 31st, 2nd, and the 5th. That would technically be, by definition, that would be the days for the Santa Claus rally. So that should be 3 days where we see more buying than selling. So we'll see what happens. I really want to see it though. It feels good to end the holidays with a Santa Claus rally, so that would be fantastic. All right, Ian says, if I sell on New Year's Eve, will the tax loss register this year, or is there a delay? So if you sell on New Year's Eve, that is not going to be a 2025 event. That's a 2026 event. That would not settle until January 2nd, because you got the holiday in there. So January 2nd, which I believe is the Friday. So that's when that's when that would happen. So yeah, don't sell on New Year's Eve if you're looking for 2025 tax break. Do it today, or worst case, well, you can't do it today. It's do it tomorrow. There we go. A says, what do you think about Capital Power stock at $59? All right, let's pull. Oh, I am still up here. All right, let's pull up Capital Power. Capital Power. Here we go. CPX. Boom, 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 boom. All right. All right, and we'll pull up the 1 year here. So yeah, so here's Capital Power. So Capital Power, um, not a bad year, not a bad year. There has been some movement to the upside. Once again, you can see here's that the little spike in here, Liberation Day. They've moved to the upside, and yeah, they have retreated a little bit lately. So 59, I think that is, if you look here, that's pretty much a support. We're in a support level area for Capital Power. So yeah, I would consider that to be a not bad place if you are looking to do some dollar cost averaging. Because we do have a bit of support. We do have a bit of support in the, basically from 55 to about 60. There's some support. You could go down a little bit more to sort of get closer to the true level of support. But at the same time, I think, yeah, I would say that's not a bad spot. Not a bad spot at all. If your due diligence is on point with this one, yeah, I would say, yeah, I think there's room for upside. Definitely room for upside. All right, now I'm gonna quickly jump ahead. Tom Smith in with a $2 super sticker. So that, first of all, let's. Oh dear, oh dear. All right, well we're gonna process the first one first. All right, so that's our final goat. So we have a show tomorrow on the books. Financial Express continues. We will be back tomorrow for a show. All right. Thank you, Tom. Thank you, Tom. Now, Brian's been waiting for this. Brian has dropped a super sticker of $2, and we know he has been waiting for this. You've all been waiting for this. I will tell you, it's not as funny as the Christmas goat, but oh dear, it's what we got. It's the baby New Year we got. All right, you guys ready for this? Are you guys ready? All right, here we go. Here we go. Oh boy. Oh. That kind of got me a little bit. That one did get that one got me. Oh boy. All right. All right. Okay. Whew. Let's get back to the chat. Oh, before we do that, I'm just going to very quickly turn off the Nightbot. There we go. Oh boy. I think we're at Mark. Mark has a QQQ. Hey Candace, still thinking of tax loss harvesting MSTE in my non-registered account. If I sell on the 30th, won't get divs. If I sell on the 31st, get divs, but taking a chance of not getting processed for 2025. So 100% if you sell it on the 31st, it is not counting as 2025. There's a 0% chance of you getting, you're not even taking a chance. You're just, the door's closed. If you sell it tomorrow, yes, you're, 99.9% chance you'll get credit for it. So if you want to take it as a, if you want to take it as a tax loss harvest, you got to do it tomorrow. So unfortunately, yeah, you're going to lose the divs if you do that, but there's no way around that, unfortunately. All right. Michelle says, hi, I'm sorry I'm late. Not sorry, just late. Okay. No worries. Cowboys in the house with the greetings all. Let's see, January 2nd, everyone will be on a shopping spree for their TFSA contribution top up for the year. There's that too. There is that too as well. Nice. And let's see, I was kicking myself for selling CPX a few years ago, but I bought BNS with the money and it performed similarly. Yeah, I mean, Scotiabank's had a really good run as well. Let's see, so cute. Let's see, I prefer that one. The diaper made me think it was Trump. All right, that's great. There we go. That laugh. Yeah. It's funny, like if I can, there used to be a TV commercial. That would crack me up back in the day. So we're talking in the 90s. If you guys ever remember, it was the Taco Man commercials. The Taco Man commercials would just crack me up back then. It doesn't now, but back then, I don't know why, I just found them very, very funny. And if I get onto a huge laughing fit, I can go. I can really laugh. And anyway, uh, Ian says I also prefer the new goat. Okay, you guys are liking the new one. All right. Well, I will. We're gonna have a bunch more. We'll have a bunch more. Don't worry. Hipple says that was a great goat. Why videos? Welcome back. Welcome back. Hi, Candace. Maybe you can show the beloved Christmas goat for Christmas in July. Maybe. Uh, I guess. I mean, remind me in July because I might forget about Christmas in July. But why not? JJ says, any thoughts on investing trading in a separate corporate account versus non-registered account? Okay. Okay, in a separate corporate account. So if you're doing that in a corporate account, of course, one of the things is that any investing that happens in there is probably going to fall under the umbrella of the business, I'm thinking. So, and once again, I think if you're going really deep into the business, yeah, you're still going to be looking at, I mean, when it all boils down, it's still going to be the same nuts and bolts of investing. You're still going to have the same general idea, capital gains, capital losses. And if you're trading, though, you are going to have, for example, business expenses. Well, you'll have business expenses. You have business write-offs that you could certainly have as well. But you will have business income. You'll have business losses that can, of course, be tied against some of the corporate expenses as well. So it's kind of a bigger game. Now, what I would usually recommend is if you're really doing it in that and you've got a fairly bigger business, then that's when you really want to bring in an accountant just to sort of pull things together because, there's a lot of tax things that you can do. Like I know a lot about taxes. I've done some corporate taxes, but I think once you start getting to that a level of money, when you start getting to that level of complexity in your taxes, you want a tax professional in there. Absolutely 100%. So just keep that in mind as well. Even if it's just a matter of a quick consultation to make sure you're on the right path. I think it's worth it. And heck, if they can point out or if they can throw something at you that perhaps it's a write-off you want to realize that you qualify for, it makes it worth it. It pays for them. It pays for them right there. All right. Hippo, only 4% of people in Canada are at their TFSA contribution limit. Yeah, not a lot of people are there. Not a lot of people are there, for sure. Let's see. Hearty laughs are good for health. Well, that's good to know. Larry says Trump is bombing the nose candy factories in Venezuela. Oh, so what nose candy? That's is that like cocaine, or I'm trying to think of what drugs you put in your nose. That's the only one I can think of, but I'm pretty naive when it comes to drugs, so I don't know. Larry says tax dodging is awesome here, at least with write-offs. Yeah, I think I think it's probably easier to find loopholes in the United States than Canada, but there are loopholes in Canada. There definitely are loopholes. Scott says 99% have no idea what their TFSA contribution amount is until March. I can believe that. I can believe that. I know my mom, like when I mentioned it to her, I was talking to her about it. Oh, I don't know. This wasn't that long ago. This was like early pandemic. And she was just holding money in her TFSA. She didn't realize that she should be investing it. She was just holding cash. It was just sitting there losing value, of course, year after year. So yeah, I mean, and I imagine there's other people that do it. They don't realize they can invest in it. They hear savings account. That's where I think I think the government went wrong when in the naming, calling it a TFSA. It should have been a TFIA, a tax-free investing account, or TFIA. That's what they should have called it. They really should have, because I think there's a lot of people I think that don't even realize they can invest in it, and they're just putting money in it like it's a savings account. And honestly, if that's what you're doing, you're still better off putting it over in your regular Big Six account and taking that 0.1% interest rate. Um, what can I say? Larry says, under my corporation, my car, gas, phone, internet, even a piece of my rent is written off. Investor diners, depreciation of my car, maintenance, insurance, etc. Yeah, and that's the thing. If you're working from home as a corporation, so if you actually have yourself registered as a business, there's a lot of write-offs. And sometimes some of the write-offs that you can get away with are crazy. I will give you an example. I was helping somebody with their taxes. This was basically going through all of the receipts and stuff, and some of the receipts were for dog food. And I'm like, oh, you got your family pet, and he says, oh, no, that dog protects the business assets. I'm like, how? Your dog would lick a criminal to death if they came in to try to steal something. But as simple as that. I mean, obviously, there's just so many things. Sometimes you have to think a little bit outside the box, but you would be surprised what you can write off. And here was the funny thing. A lot of times the person whose taxes I was doing, his family, a lot of times I actually had dinner with them, and they always paid. They always paid every time. And when I was doing the taxes, I was finding the receipts for all these dinners. I'm like, what? And they're all business dinners. I'm like, really? How is this business? And it's like, well, we mentioned this once. And it's like, okay. So yeah, there's just a lot of things that you can do. JJ says, I have a business with cash sitting. I saw on Wealthsimple they have corporate accounts. I figured, why not use that cash for covered call ETFs, dividend ETFs? Okay, yeah. Now, I'm not 100% sure what cash sitting is. I don't know. Are you like babysitting cash for people? If that's the case, you want to certainly make sure you maintain a certain level of liquidity in case you've got people who want some of their money back. But yeah, why not? Why not make a little bit off of it? For sure, if I was babysitting cash for people, I certainly would. I would be using it in very, very, very safe investments, or a very worst case, I'd throw it all into a cash ETF, make a little bit of interest off of it, and then just give them their cash back when they want it. That would be the worst case. I mean, chances are you can make a good amount of money, especially if you've got ongoing and you sort of have an idea. And this is what I would be doing. I would be plotting in a situation like that, how much cash is going out, what's the average amount of cash going out, coming in. So that way there, I would know how much needs to be liquid. So that way there, I can cover any, eventuality of somebody coming in saying, oh, I need my cash. So I would always have a certain amount of liquid to make sure I cover the average request. Or maybe, just to be on the safe side, what's the peak? What is the peak? What peak have I ever had? Make sure I can cover that. So that kind of thing. And that's kind of what the banks do, if you think about the whole fractional reserve banking. Anyway, and I'm just guessing what cash sitting is. I could be absolutely wrong and going off on a tangent for no reason. Cowboy says, can't bring myself to sell at a loss, especially when I think it will recover. But you know what? Here's the thing. It isn't always about will it recover. It's more or less like if you're sitting at a loss, and yes, maybe that asset will recover, but it might be a long recovery. So sometimes it can make sense to take that loss, move it into something that is doing much, much better. And you technically, even though it's not the recovery with the one that you were waiting for, it's the recovery with the one that you moved it into. So it can make sense. It can absolutely make sense. Larry says, my work laptop, gaming laptop is a write-off. Nice. All right, 64 and 46. Okay, I started a TFSA in 2023. So do I have 12K of room? I'm just getting an information about this. Okay, it depends on your age. So if you are, let's say you're 50. you're going to have all of that space. So basically, you get all of the space from the past. So I can't remember the exact year they started it, but if you're over 50, then you're going to have, you'll have about 107,000 or so in space. So you do get all the old space as well. Now, if you're young, so let's say you just turned 18 in 2023 and you started up your TFSA, well then yeah, you would just have a little, you wouldn't have as much. So you would only have the space from when you were 18 and the years above that. So let's see here. Scott says, even if you won't just cash in your TFSA, at least put it in an HISA or a ZMMK. Yeah, yeah, those are cash ETFs. Exactly. Ian says, a lady in the States had her safety deposit box broken into, had 40 years worth of savings in there, $47,000. She could have retired with that cash if she would have invested it. Yes. Yeah, there are people out there that don't trust banks. They don't trust anything financial. Those are the people that will put them, they're the people who will put money in a mattress. Unfortunately, if that money's not working for you. And, the very people, the very institutions that you don't trust, that's what they're doing. They're putting that money and making it work and making them tons of money. So yeah, if you're going to, have a little box or a safety deposit box and just put cash in there, it's all it's doing is losing. It's losing value year after year. All right. Larry says, I even have business dinners with myself while going over other things. Well, that's a thing, right? If you go to a restaurant and you have a business, if you bring some of your work with you and you work on a few things while you have lunch, yeah, technically that's a business dinner. Absolutely. Cash sitting equals idle cash from the business. Oh, okay. Because I was sitting here, JJ, thinking, is this really a job? Some people are like, can you please babysit my cash for me? Don't know. But yeah, no, I hear you. I hear you. Oh boy. Michelle says, I may have missed this, but when will you do a video of 2026 predictions? It's already, I'm already in the process right now of formulating it, so it is in the pipeline. First week of January. So it won't be the video that comes out on Friday, but it will be in the following week. It'll be probably one of those two ones, 100%. All right. All right. Claude says, my 2026 prediction. The Nordiques will be back here in Quebec with Peter Stastny as head coach. Oh, not that kind of a prediction, hey? Well, that would actually be good for Quebec. The Battle of Quebec between Montreal and, the Canadians and the Nordiques, that was a big deal. That was a big deal back in the day. Wahipple, I am pretty excited for a 0 to 100K video with all the supers and gifted memberships this month. Yes. There is going to be, that's also, that's also coming out very, very, very soon. In fact, I probably, yeah, I'm going to say that one. This is, I guess here's my thinking now, because I have to make a video for Friday, and that is the 2nd. So I think on the 2nd, I'm going to aim to do that prediction video. Let's get the prediction video for Friday. The 0 to 100K, we'll have that for, and what is today? Today's Monday. Okay. The holidays have messed up my sense of time. And then we'll have the 0 to 100K come out for next Tuesday. So yeah, there we go. So prediction, then 0 to 100K, and then we'll, I got a few other little prediction videos as well, like sectors to watch, or not sectors, but stocks to watch. I want to do that as well because everybody seems to like that one. All right, let's see. In Canada, they call this fraud. Here is good old-fashioned American ingenuity. You'd be surprised how much you can get away with in Canada. I'm just saying. Cowboy. Had an accountant advise me to lease a truck as lease is total tax write-off, but still a monthly expense, while the on I bought was paid in full, made 0 cents to me to have debt. Um, yeah, I can understand that, but sometimes debt is like a lot of the rich people. They, a lot of them don't even take salaries. Like you take Elon Musk, he's not taking a salary from Tesla. He's taking stock options because he can borrow against those stock options, and then so that's money he doesn't have to pay tax on, and then he can use the interest on the debt as a write-off. So it's one of the reasons. Like if you look at big art, why are some of these pieces worth millions of dollars? It's because, well, rich people want to use them as assets. And that's kind of what's inflated a lot of art. And they get used as assets. So people hold all this stuff. They use it as collateral for loans. So that way they can, once again, they're writing off that interest. So there's a huge amount that, is it, I mean, it's kind of a broken system if you think about it, because it does, it creates some really great loopholes that rich people are using. They're using them big time. So yeah, there's definitely, I would love to see, and here's the problem though, right? Because the problem is if you create something where you say, okay, well, like let's say you go with an unrealized gains get taxed. If that were the case, well, then that would impact, of course, people who are just starting to invest, people who, are not abusing the system. So it would impact everybody, and that's kind of how do you do it so that you are just taxing the rich? It's a hard way. But I mean, the reality is, if you're in the process of becoming rich, you might as well do it. Everybody else is doing it. Until the system gets fixed, that's just kind of the way it is. And it makes sense if you love money, to sort of understand how that system works so that you can also take advantage of it. All right, nice. Thank you so much. Larry says, have board meetings involving tequila and Chinese food. Oh boy. Your board meetings sound fun. A says, in regards to business write-off, you can only write off if you have profits. True enough. I mean, if you have no profits, you really, yeah. Now I don't, and here's a question, and I don't know this. Guys. So if you are having losses, I'm assuming from what A is saying, you can't even bank off some of your write-offs, because the write-offs, yeah, that's kind of an interesting thing. I want to look more into that now. I kind of do, because I'm kind of looking at it. I'm like, it doesn't seem fair that, if you've got all these business expenses, why can't you just carry them forward? It seems to me like you should be able to, but I'll look more into that, because I honestly don't know. I can't definitively say one way or the other. Cowboy, inflation is killing our money in all cases, whether in bank, market, or mattress. Well, inflation's never fun, never fun. Let's see here. You should do a video. I where people. Okay, let's see. You should do a video. I where people should. Oh, on where people. Okay. Oh gosh. Sorry, Tiberius. I was like reading it, and I think it was the autocorrect. It kind of was like, you should do a video. I wear people. I'm like, what? Okay, so you should do a people. You should do a people. You should do a video on where people should put their allocations of their portfolio in general terms, like somebody in retirement, somebody 5 years out of retirement, and somebody in their 20s or 30s. Yeah, that's not a bad idea. I've covered this. I've covered this in many different videos in the past, but probably probably needs a good update. So yeah, I like that idea, Tiberius. I like it a lot. All right. Let's see. Hello, I am 22. Started investing already. Great. I love to hear this. This is the thing. Raj is going to be rich. No doubt about it. If you start in your 20s, you have the power of compounding on your side. So that's fantastic. That's fantastic. I'm glad to hear this. Very glad to hear this. A says, do people still use the Big Six when you can deposit in EQ Bank or Wealthsimple and have at least 2% returns with cash sitting in the account? I Yeah, I think so. I think so. The biggest reason is there's a lot of people don't know about EQ Bank. A lot of people don't know about Wealthsimple. So, we know about it. We talk about it all the time. It's part of our world, but a lot of people don't have a clue. All they know is the big six banks. A lot of people don't realize there are other options. So, yeah, there's still a lot of people that are doing that. And I guess if you're investing in the big six, that's kind of a good thing, I guess, because then at least their profits are pretty secure. All right, so let's see here. Raj says, I'm investing in XEQT, VFV, QQC, TEC, Bitcoin ETF, and gold ETF. I need your suggestion. XIC as well. Well, beautiful thing is, there's lots of ideas on the channel, things that you can put on your radar to do some due diligence and see if they do match your portfolio. Now, looking at what I see here, it looks to me like I like the fact that a lot of this is dividend growth. I think dividend growth is where you really probably want to focus. Income can be very, very tempting when, at all ages, but I think for you've got such a long runway ahead of you, really concentrating on getting the biggest total returns possible and just growing that TFSA. I think that's important. So things like VFV, that's fantastic. That's your exposure to the market. XEQT, fantastic. Another one of my favorites. You're getting worldwide exposure, including emerging markets in there, and that's really, really good. Bitcoin, once again, I think Bitcoin will do well long term. That one will probably really grow. The big thing about the Bitcoin, though, just keep in mind, a lot of volatility. So when we go into a crypto winter, you'll see it'll be in the red for that winter, but it will rebound. It will rebound really, really well. Gold, another solid one. So you've got a lot of solid stuff going on here for sure. I like the bit of diversification. I can already see you starting to build in some diversification. That's fantastic as well. So you're on the right track. You're definitely on the right track for your age, for sure. Tiberius says, you should do a general allocation of ETFs for people in different age groups. It's actually interesting. Back in the very early parts of the channel, I did my first little series. Basically, it was investing for the generations. So I did I did a boomer one, Gen X. Did I do Gen X? I think I did Gen X, millennials, and Zoomers. I'd like to revisit that in a completely different way, but this is not a bad suggestion at all, Tiberius. I like it. I like where you're thinking. All right, let's see. The elite rich are not going to pay tax. We have to cover them. Unfortunately, yes, that's kind of the way it works right now. What should be for 22 years old? Want to retire in your 40s? That's aggressive. Retiring in your 40s, it's doable. It's doable, but I'll tell you, you're going to need to be very dedicated. If you want to retire in your 40s, you're looking at working hard, making as much money as possible, and funneling it all into investments. Because I would say if you wanted to do it reasonably by 50, it would be doable by 50. But just concentrate on growing things big time. Also, concentrate on the fundamentals too, because that way you want to avoid one area that's very tempting, especially when you're younger, is those penny stocks. I would definitely say avoid penny stocks. Look for things that have solid fundamentals, things that if we go into a bear market and stocks drop 20%, you're going to be fine, because these are the companies that will survive. So you take something like Microsoft. Microsoft has been through a whole bunch of bear markets. They're going to be perfectly fine. Or, in this case here, an ETF that's holding Microsoft or holding a good a good mixture. That's the beautiful thing with ETFs, is that even if one company in that ETF fails, obviously what will happen is, one, it won't really impact the ETF much because the others will buffer it out. And two, whoever's managing that ETF will probably get rid of that company if that company has a serious problem, replace them with somebody else. So it's not a bad thing at all. Another thing is, keep learning. That's going to be a huge part. If you want to retire in your 40s, don't stop learning. Learn, and not just YouTube, not just from me. There's lots of great books out there. One really good line of books, and people get turned off sometimes when they hear the titles, but the dummy line of books, like there's a Dummy's Guide to Fundamental Analysis. There's a Dummy's Guide to Options. Those are great, great books. They're really, really good. So don't get lost by the name. So I would highly recommend. So in this case here, where we've been talking fundamental analysis, the Dummy's Guide to Fundamental Analysis is probably one of the ones that I would say definitely read. Definitely read that one. That will certainly help get you on that right track. And understanding fundamental analysis will protect you when you do your due diligence. It'll make your due diligence that much stronger for it. All right, Larry says in America you can write off losses for 20 years. Nice. I could have swore I know what A said, but I want to look into that because, like I said, I kind of thought I could, but maybe I can't. All right, let's see here. Oh, here we go. So 2024, 2025, 7,000 each year. Yeah, and these are the different years right there. So there are sites, so TFSA sites, where you can actually look at the contributions for every year. And then just, you'll use your age, match it up. You can add it up. You'll figure out exactly what it should be. Also, if you go into your CRA site, so if you go into the CRA site, it should also show you. Now, it's not always up to date on the current stuff, but if you just started investing, it's going to give you a ballpark figure. It gets updated after you do your taxes each year. So, I go in there and I look and I'll see 107 or so. So yeah, you'll see it there for sure. Let's see, Larry. So if you take a big loss, then make money later, you can use that prior loss to avoid paying taxes. Yeah, that's the way I believe it works here too. But like I said, A thought it was the other way. I'll double check just because, I can be wrong. And I hope I'm not on that, because that would make more sense. Scott, it's convenient to use the bank's brokerage. Even online banks like Simply use CIBC's brokerage. Yeah, absolutely. So when you're looking at, like each bank, like Scotiabank, for example, has the iTrade, and that's very, very convenient for sure. And even then, when you start using them, you don't realize that there are commission-free options. So yeah, what can I say? Any word on the HBTE payout for January? Good question. I'll take a gander here, see if we got anything yet. Whoops, let's go with HBTE. There we go. All right. And I'm just going to go straight into the key data. 43 cents. So yeah, 43 cents. That's on the January 6th one. So yeah, same as normal. It's still 43 cents. So I know Cowboy's been down on HBTE, and I know you've been expecting a cut, but no, it is 43 cents. So there we go. Raj says, can I share my allocation for these ETFs so you can understand better and give me a better suggestion? If you want to share them, let me drop something below here. All right, so I just dropped my link for Blossom. So Blossom, that's a social media app for investors. So if you sign up to Blossom, you follow me when you get in there. Very easy to do. Just look up Mountain Finance. I'm the only Mountain Finance on Blossom. then either attach your broker to Blossom or just manually enter in your allocations to Blossom. Excuse me, I need a drink here. Then message me on Blossom. And if you want, I do this. If you message me on Blossom and say it's okay if we look at it on Sunday, because I do these on Sundays, then I can bring it up. We can bring it up and look at it on this week. So that's on the Sunday live stream. So if you want to do it that way, we can certainly do that. I don't mind. Scott says you probably skipped Gen X. Gen X always gets ignored. Gen X doesn't get ignored with me because I am Gen X. So nope, I did not ignore Gen X. 50% XEQT. Okay, 50%. That's a fair amount, but XEQT is a really well-rounded. There are some people out there, Raj, who just that's all they hold. 100% XEQT. I personally wouldn't go that route. I would prefer to have a lot more diversification, but I think XEQT is probably one of the most diversified. One of the most diversified ETFs. There's also FEQT. That one has a bit of crypto in there as well. But there's a lot. All of the all equity ones, I do love them. I love all of them. Let's see. Have a look at EWZ. It looks great in my humble opinion for the long run. Let's see. 64 and 46 says, Scott, thank you for some information. Are there any copper stocks that you recommend? I will mention some in the video that drops tomorrow. Channel members have already had a chance to look at it, but they chose copper for the video. So we're going to have a few looks. I will tell you one thing. There's one company I have been preaching for a long time when people ask me, what's my favorite mining stock when it comes to copper? It's a little ticker called Mary, and I'll show you right now. I'll show it to you. So MARI, this here is the Marimaca Copper Corporation. All right, now I do like this one, and I'll show you in the last year, they've gone from $5 and a bit to $11.15. So they've been doing fantastic in the last year. I think copper is going to continue to do well. This is one I like. I like this one quite a bit. There's also a lot of good copper ETFs, and if you want some income, there's even an income ETF out there now as well. So copper, yeah, I'm loving it. Check out the video tomorrow. I mean, if you want to check it out right now, you can always sign up and be a channel member, and you can see it like quite literally the second you leave here. But otherwise, yeah, it'll be out tomorrow as normal. Ian says 22 is possible. I did it at 44 and I started in 2020. That being said, I might run out of money, but I also have a few good pensions waiting for me. Also, my house is paid off. Yeah. So there we go. You might be able to do it, Raj. The big thing is continue learning. Learn, be dedicated, because you kind of have to sort of look at it. One of the things is there will be sacrifices that you will have to make. Like, you won't be buying a flashy new car. If you have a car, you'll always have that older secondhand car that you got nice and cheap because, or even better yet, don't have a car at all. I mean, honestly. Depending on where you live, though, that may not be practical. All right, Mark says, FYI, Wealthsimple says, when you sell ETF, disposition date on T5008 is trade date, not settlement date. If you sell on December 31st, it's reported for 2025 tax year, even though it settles in January 2026. That's interesting. That kind of goes against what I've always heard. Yeah, that is interesting. Gosh, Mark, I would be really careful with that. I would double check that even outside of Wealthsimple, because I've heard differently. But yikes. That would be interesting. Disposition date, huh? Yeah, I definitely want to look into that more. I would just double check that before you wait to get that dividend. I would double check. Let's see. Ian says, I would so. You can do write-offs even if you have losses, but I believe you will dig yourself into scrutiny by the CRA if you do it too often, leading to audits. Oh, okay. All right. Well, there we go. That's kind of what I was thinking. All right. That makes sense. All right. Thanks, Candace. Ian says, I sold Utes at a loss a few weeks ago. Bought ENCL with the funds, going to wait 32 days and sell, use the money to buy Utes in my non-registered. I should be able to tax loss harvest that way. Okay, yeah, absolutely. Let's see, been adding to Utes on my list. Its dividend is good, plus the stocks in it are solid. Yeah, I do. And I like Utes. Utes is, it is income, guys. It's you're not getting into Utes for any real growth. They are pretty flat. Well, I mean, there's a lot of volatility, but overall, you're not going to make any growth money, but you will have some pretty good dividends for sure. Ian says investors should always be tax savvy, but it only really gets important when your investments become the main part of your income. Yeah, for the most part, that is correct. Um, like I said, Raj, I don't mind looking at your portfolio, but let's do it through Blossom, and we'll do it on the Sunday show if you don't mind. Um, let's see. And Ian says, Raj, 22 is a great time to start investing. Yeah, I agree. I agree. The earlier, the better. I mean, obviously, the best time is 18. But here's the thing. I mean, even if you do start investing at 18, you don't have a lot of firepower in your wallet to put into investing. You typically don't. But every bit of firepower you do put in, every dollar you put in, is gonna, over the course of your investing career, is gonna make a lot more. So, your dollar's much more powerful at 18 than it is at 20, than it is at 22, than it is at 24. So that's that thing. That's that thing. If I could redo my life, I would make sure that young 18-year-old Candace would know how to invest and would be pumping some money in, because those are the prime years. And every year you're going to make, you'll get less compounding going forward. Even though you're making more money, you're putting more money in, and it feels like you're making a lot more. All of those early dollars they just really compound through the entire life, of course. All right, guys, we're getting pretty close to the end. If you got your final questions, get them on in. I will point out we do have a show tomorrow, so we will be back, of course. And tomorrow's video, it is the members' choice video. So that is, they chose copper. It was actually funny. They had there was two topics that were tied right up to the night before. I had to script the video. When I got up in the morning, I was looking, I'm like, please don't be tied. Please don't be tied. And copper was ahead. So I was like, yes, when it comes to their vote. So the channel members came through in the end. I love it. So that one will be coming out tomorrow. Let's see. Max says, hello all. Hey, Max, you're coming in towards the end, but that's fine. It's always good to see you. Always good to see you. Brian says, they don't teach investing. Shut up and square dance. Oh, yeah. When I was 18, BNS was under $15. Oh, nice. Nice. Yeah. I don't even know what BNS was when I was 18. Probably lower than that, because you're significantly younger than most of the folks here. Cowboy, could you stock a child's TFSA, for example, place $10,000 into an ETF and set for drip? Well, your child doesn't get a TFSA until they're 18, so in that sense, you would have to still wait till they're 18. Yeah, it's kind of that interesting thing. Now, what I would almost say is if you wanted to put, let's say, $10,000 into an ETF, you could do that through, for example, an RDES or an RESP. You could do that through that one there, but then that becomes That becomes another thing. Like there's a little bit of rules around it through education and all that, but they'll get grants. That's the nice thing is you'll get some grants on that. So that is one that you can certainly do. So let's see here. Oh, okay. So let's see here. Scott, can you do RESP? That's the educational ones. All right, my kids are past 18. Okay, well that's what we need. So yeah, if you want to put $10,000 into their TFSA, um, technically you're not supposed to. Technically, yeah, you could. I mean, you could do it. It's just that I think the government sort of frowns down a little bit on giving big gifts of money. So even, for example, um, if you give something to your spouse to put into investing, it's supposed to be done as a loan. It's actually, but honestly, if you just give them the cash and they put it in, and the government doesn't really know where it came from, uh, that amount, it probably won't ring too many bells. But if you were to do it like with 100,000, it might ring some bells, have some people looking at it. So yeah, I was just, yeah, just be careful with it. I would be careful with it for sure. Let's see. Ian says, when I was 18, you could buy 18 beer and a pack of smokes in the bar for $30 and still have $1 left. Smoke $6, beer $23. Okay. Well, yeah, I have no clue what even what either of those cost. Being a non-smoker and a non-drinker, I'm naive. I'm naive, Ian, but oh well, yeah. I just imagine it's significantly more. Like I think we guessed, didn't we once I think recently I thought that it was like about $20 now for somebody who wants a pack of smokes, but I don't know. I really don't know. Let's see. Sad that the government wants to control gifts. I know. It is. It is. And, it's kind of one of those things. Like, I think they just want that money accounted. And here's the thing, though. And this is kind of the way I look at it. That $10,000, you've already paid the taxes on it. So it's not like the kids are getting it tax free. So I think it's just the whole investing part. But I would look into it a little more. Honestly, I think if you did 10,000, I don't think that's going to be a big issue. I think it's when you get to larger amounts. But yeah, and Scott's even thinking that the kids would be fine. Just the spouse might be different because taxes are shared per household, and that might be it. That might be it. I will honestly say I haven't looked at the kids. I've only looked at the spouse because I did a video on income sharing, and that was all spelled. That was all spelled out for me when I was doing my research. So maybe the kids are fine. I would double check. I really don't know. Scott seems to think that they would be okay. I'm just saying, be careful. Double check, make sure. Ian says, can't afford to drink in Canada anymore. It's more than $2 a beer at the liquor store. Okay, yeah, there we go. And yet they want to give UBI. Well, I haven't heard UBI actually mentioned by any of the governments in a while. So I don't think UBI is something that we'll see anytime soon. Not unless if AI gets to a point, I think where AI needs to get is when we've actually got robots. When we got the robots, then UBI is not that far behind. But right now, we really don't have and I'm talking the humanoid robots. I'm not talking about like the robots in a Amazon warehouse. But when we start getting humanoid robots that start doing all of the jobs, and people start losing jobs left, right, and center, that's when UBI will start to become a real discussion, and it will eventually happen. Because obviously you can't, if robots are doing everything and there's no jobs for people, what are people going to do? Well, they're going to probably start doing crime because, you gotta feed your family somehow. So yeah, to avoid that, the governments won't really have a choice. It's like, well, we got to give them something. Otherwise, we've got riots, we got unrest, we got higher crime rates. So UBI will happen. But I don't think we're anywhere close to it, Cowboy. I think we're a ways off. All right. Whew, guys, we have now just hit. Okay, where's the money for UBI going to come from? That's a good question. And that's something that governments are going to have to figure out. It might be a situation that probably there's going to be higher corporate taxes right across the board. So all of these companies saving tons of money by having robots. Well, some of that they'll still be saving money, but some of that they're going to probably have to pay back to the government. It'll be something like that. We're going to have to sort of reinvent the entire tax system. I think would have to be reinvented. Um, so there's a lot of work before we could ever get there. A lot of work. So it's not going to happen anytime soon. Um, A says, I don't feel we will see UBI at least while Carney is in. He is right-wing liberal and business friendly. If he was conservative leader, he would have had a landslide win. Yeah, no, I mean, yeah, Carney, political spectrum wise, I would call him a small C conservative actually. So, yeah, it's not, and this is, here's the thing, guys. When UBI does happen, I don't think it's going to be a political thing. I really don't even think it should be politicized. It'll be more or less, we don't have a choice. That's kind of where we get. Even Elon Musk is saying eventually UBI has to happen. It doesn't matter if you're right or left. It will have to happen at one point. We're just not there yet. Right now, the whole thought of bringing UBI in now, well, it's way premature. It's way premature. It's not going to happen anytime soon. But one of the things, yeah, Ian is right here. UBI would replace welfare, unemployment insurance, disability, old age. So the old OAS would go away with UBI. Um, I imagine CPP might stick around, but it's hard to say. But they can basically, and that's part of the savings right there, right? Because all of the money to administer all of that goes away. So there is places where you are going to save. There are places where you're definitely going to save. So, all right, guys, with that, I will be back tomorrow. We will do this. We'll do this all over again. We'll see what the day holds. It should be a good one. It should be a good one. Until then, though, guys, enjoy your evening. And if you got freezing rain where you are, stay in. Don't drive. It's not worth it. Enjoy your night. And, we'll be back again tomorrow. Until then, I will say one thing, and that is